Ladies and gentlemen, many of you have recently joined us, it seems. Once again, I would like to welcome everyone to Bharat Fintech Summit 2024. This is day 2, and we are done with the first session. Now we will quickly move on to our panel discussion. In keeping with the innovation, inclusion and digitization theme of Bharat Fintech Summit, we are now moving on to the first panel discussion. The topic of this discussion is Beyond Plastic, Future of Credit Cards in the Digital First World. I will request our panel members to join us on stage, beginning with Mr. Arvind Butola, Product Head, Digital Bank AU0101, AU Small Finance Bank. Mr. Amarjit Walia, Head Consumer and Commercial Card, ICICI Bank. Ms. Deepti Sanghi, Founder of Kodo. Mr. Prithwish Ray, Chief Business Officer, Hyperface. Mr. Kohinoor Biswas, Head Consumer Lead, and Postpe, Bharatpe. The session will be moderated by Mr. Saurabh Puri, Chief Business Officer, Credit Card and Lending Product at Zaggle. So the panel members are here, along with the moderator. Can we please have a round of applause for all of them, everybody? Thank you. Over to you, Mr. Puri.
Thank you. Thank you. Good morning, everyone. Thanks for joining us here. So we have gathered here to discuss a really interesting topic, which is Beyond Plastic, Future of Credit Cards in Digital First World. Well, it's indeed an interesting topic because as consumers, most of us have experienced this product for years now. So credit card, when it was launched years back, it was quite a disruptive product in the market. So consumers for the first time were not only getting a payments product, which was a replacement of cash, they were also getting a product which was along with a credit line on the fly. It was also an aspirational product for many. The plastic had a lot of flash value, and for many consumers, owning the first credit card carried a lot of emotional value as well. But over the years, we have seen a significant transition, specifically in the last 4-5 years, in the way the consumers are transacting today. Whether it is emergence of e-commerce, whether it is the technological advancements what we see in the form of smartphones and internet, but surely there's a significant shift that is happening, and consumers today are expecting more and more payment options over and above what the traditional plastic can offer. So to discuss this more, I have with me the panel here. Let's hear it from them. What is going to be the future of plastics? How the POS machines is going to pan out? What are the various trends? To start with, let me ask the first question to Amarjit. Amarjit, you've been associated with the ICICI Bank for a very longish time. And ICICI Bank was one of the early adopters of credit cards at scale. And over the years, the bank has launched many products, innovative products. But this transition is something which is kind of really rapid. So how do you see this transition from a physical plastic to a virtual card happening?
Thanks, Saurabh, and good morning to all of you. Before we really understand the transition, honestly, credit cards in this country, the way we've moved in the last few years, and even now the penetration remains quite low. If you ask me, for a country of our size, at about close to about 10 crore cards now, we still are probably at a penetration level which is less than I would say 0.25%. Depending on the customers that we can onboard, right? So last 5 years, as you mentioned, Saurabh, I think things have moved in a very different speed, almost about 20 to 25% CAGR growth that we are seeing in the number of cards, as also the spends have gone up very, very well. And customers, of course, wanting to spend in various different ways that you just mentioned. See, bank like ours have had its bedrock in digital first always. If you go back when the bank was set up, the bank was set up with, largest number of ATMs in the country. Bank was set up keeping in mind 24/7 banking. Our app, many of you all be using our app. You understand, that we've been trying to give all possible features and services in the app. As regards to credit cards, I think we, of course, were one of the key entrants way back, but we kind of redefined ourselves come 2008 to 2010. And Sudipta is in the audience. He's the chief architect of that transition that happened by that point in time. But I think what we've always believed is that the option the customer should have basis their choice. We understand that you have debit as a choice, you have a credit as a choice. We understand within debit, you want to use plastics, you want to go device tokenized, you want to go UPI way, whichever way possible, we are there with you. Okay, that's been really, our ethos. What we've done in the last 3-4 years is, I think, we've ensured that every single aspect of customer journey is digital first. So today, we don't touch a paper. And for a bank of our size, it wasn't easy. If you ask me, if I'm a fintech, if I'm someone who's so agile, I can do it tomorrow. But bank of our size, we had to put the pieces in place. Of course, thanks that our, digital prowess was in place. We've now ensured that journey and partnering with the right set of guys where, the customer understanding is deep, our large co-brands that exist today, and the information is seamless. So that's where it all starts. Then getting the customer to, provision the card where you want to spend. Is it quickly rendered on our app? Are you able to use the card or the phone instantly is what we do today. We are Android ready for, tap and pay and move on. Of course, it has to take up in our country. And also ensuring that all our types, including affordability, is placed in a manner where, virtual plastics or your phones kind of get you to that. So as a bank, right now we are focused to ensure that you don't have to reach out to your pocket as much possible. Of course, Apple Pay users are not there in India because Apple is yet to launch. That is something that probably in next quarters to come in we would see. But as a bank, this transition, keeping the safety, security in mind, we're ensuring that you reach out the least and your phone virtually or any other form factor is available for you to. But having said that, we do believe that physical plastic will exist. It is not going away tomorrow. Okay, not because, our country is fully not ready. Okay, it's getting ready, but there are many, many countries. Infrastructure is not ready. If I'm traveling abroad, even the largest of countries today don't have the infrastructure to really do it without plastic, as you know. All that is growing. So that's where we are. We'll keep building on that.
Well, that's an interesting point you made. I think one is obviously the transaction side of it, which we talk about a physical card versus a virtual card. But here what you are saying is it's also the journey and our ability to issue card at the moment of truth is something which is important. And I think you really touched upon that very interesting point that it's not only the geography in India, it's not the tier 2, tier 3 cities, it's also the international market where the infrastructure is maybe not at par. In India is pretty ahead as compared to many other countries. I think these are like really very good points. Moving on, Arvind, on the other side of the spectrum, AU Bank is a new entrant in this space. And Arvind, you manage not only the credit card piece, you also manage the entire digital initiatives in AU Bank. So these new generation digital first payment methods, what we see today, how this is influencing customers' way of spending today?
So thank you for the question and good morning, everyone. I think before I jump into the future, I'll kind of go back a little back when we started with credit card, correct? Credit card, I think initial years, if you see, it was largely conceived as a convenience product. The only very few select customer with, say, high income or high street or working with the MNCs had accessibility to this product. And it was largely used for the convenience. And then as we moved on with it, I think the entire credit, means bank started promoting as a credit product, and we started underwriting people more and better and faster, and hence it and made a business out of it in the sense like we could do more and more people, credit to more and more people and extend this credit card to everyone. So I think in the first 2 decades, I think the convenience was solved, the credit was solved. Now, I think what is happening in the digital age, I think we're solving for the consumption. What digital is actually doing is actually increasing the consumption. And what I mean by the consumption is basically now taking a card is very easy, correct? I think almost every bank issue a cards within 4 to 5 minutes, correct? Because the convenience leg is there. The credit is now sorted. You can underwrite customer with your scorecards, your bureau with the help in few minutes, correct? And spending And there are avenues which is increasing on this spending, correct? There are, like, we've done some breakthrough work in the sense like a credit card which used to come, or it still comes with a very static value prop, correct? We've changed that narrative, and we've done some product where we kept the value prop very dynamic. So you choose what you want. And what will happen through this, basically now customer has many options, or customer can actually choose feature basis their consumption pattern and not remain with one static value prop, correct? This has helped us to give a power to the customer that he can spend across categories, across usage of their life cycle, correct? And not only choose, he can change also as the life cycle grow. So this digital leg is actually helping the entire consumption, build the consumption story around the credit card. We all know that the credit card spends these days are growing not year on, month on month, and a very exponential rate. The another cycle, which is, I'll give credit to the, digital innovation. That way, the credit on UPI is bringing in another leg, correct? So now a very small expenses, daily expenses of yours are actually started moving on credit card. So digital is actually giving impetus to the entire spending pattern, correct? Earlier we thought only we buy electronics, apparels on the card, and we flight on the card. Today we even buy our daily morning bread on the credit card spend, or even the chai or that nukkar or with your friends you would be doing on the credit card. So the digital is making it easy and making it more consumption friendly, or making it more consumable to the consumer. That's our view, and this is across geographies, this is across segments. Yeah.
So interesting. So what I hear is like, so there was a clear distinction between a large transaction going to a credit card product and small transaction going to other digital products. With this credit on UPI coming in, you are saying that it is going to become more universal in nature, and more transaction, even the smaller ticket transaction can happen through this initiative. That's an interesting point. Prithwish, my next question is to you. Hyperface is working with a lot of banks today. And you have seen the digital technological advancement that is happening. So how do you see this physical versus digital versus phygital? Do you think that it is going to coexist, or there is going to be a significant transition that is going to happen in near future?
No, thanks, Saurabh, and good morning to everyone. I think what Amarjit and Arvind very rightfully alluded to, you've got to give the customer the choice, and she will choose. Of course, what we've got to make sure is that it is in the right place, we've got the right guardrails. So to your question, and we obviously have the good opportunity and fortune to work with some of you on the panel, what we're seeing is, of course, you're giving choice, you're giving, multi-form factor options, but perhaps three things which are non-negotiable, in that sense. One is you've got to play within the regulatory guardrails, whether, how many, is it a 2FA, is it a whatever, those things. Second is customer experience. And the third, of course, is how you're able to ensure fraud, how you're able to ensure that the goods come in and the bads stay out. So there we have, we call ourselves in Hyperface the definitive credit cards innovation platform. In simple words, we help banks and clients innovate better, hyper-personalize better, and commercialize faster. So that's where we come in. For example, if I am swiping at a given kind of MCCs, then I need to perhaps have more checks than the others. And again, every issuer and every bank, of course, they have the right set of ideas and the strategies. But to implement that, make it simpler, faster, and better. That's the way I would put it, our USP. And again, as this payment space evolves, and Amarjit's point on 100 million becoming 200, 400, you will have to have coexistence of physical and digital payment options. That's the way I see it, Saurabh.
Great. So I'll turn the discussion a little bit into a different segment altogether, and we all understand, being industry players for long, MSME is one sector where credit card penetration has not been deep. I think that is one problem statement what we have realized. It is more because the access to credit to MSME through a credit card product is not easily available. Banks are not ready to take a call on that. So this question I would like to ask Deepti, Kohinoor, as well as Arvind. So I'll start with Deepti. So what are the products, financial innovative products you are working on to drive access to the MSME sector?
Sure. Thanks, Saurabh. So before we get into that, let's understand the scale of the challenge we are dealing with here. So there's a lot of data out there. Just to summarize that, there are about more than 63 million SMEs in the country. And they represent about 90% of businesses in India, and they employ 60% of the workforce here. Yet, when it comes to their credit needs, only 40% are met by formal financial channels. And the reasons are many, one of them being that it's considered high risk and for valid reasons. And there has been a lot of work in reducing that risk perception by digitizing and formalizing them. And there are a lot of strides there when it comes to digital payments, the GST ecosystem. So that's great. But the fact remains that they're still considered high risk. So lenders look for collateral. And these SMEs don't have enough collateral to meet their credit requirements. So then what we get to is that we serve them through cash flow-based lending, right? Now that is where platforms like us come into the picture, where we say that at the point of a transaction where a B2B payment is happening, that is where we can provide access to credit. Now, what do? We offer corporate cards and spend management platform for all kinds of businesses in the country, be it a small business or a large enterprise. Our platform enables that. So think of it like whenever a business has to spend money, they can do it through our platform. And why would they use that? Is because we help them control their costs by ensuring that all the approvals are in place, whoever needs to approve a certain payment, and all the compliances are in check. So we really provide them a platform to make all their business spends with a lot of confidence. Now, if it's a small business who's using our platform to make a payment, that is where we can connect them with lenders who can offer them credit to make their vendor payments and have a stronger control over end-use monitoring for these small businesses. And when it comes to an enterprise who is making a payment to a small vendor, we can offer credit to those small vendors on the basis of their receivable history with these enterprises. And that gives a stronger confidence to the lenders in terms of their riskiness. And that's one of the ways that we are solving for credit at the point of transaction for B2B payments.
Interesting, Deepti. In fact, interestingly, between commercial cards and consumer cards, the ecosystem is reasonably, and Amarjit, you understand this space pretty well. So it's reasonably evolved. I think the software solution, the software leg to the entire transaction process is really, really helping in getting this segment to transact on credit cards. I think that's a very interesting point you made. Arvind, coming back to you, so AU Bank is known for being present in the SME segment, and so how do you use the alternate data to underwrite customers? So how do you go about underwriting these customers where they don't have transaction history or they don't have enough credit history to prove their worth?
So I think how do we underwrite them or looking to underwrite them? I'll come to that question with little reference to other thing. I think this segment is different, correct? What with the credit card, if you see we trying to fit a product which is, say, largely built in a way which is for sell, right? That you get your salary once in a month, you have a card where you get once in a month bill, and then you pay, correct? So I think we're actually at the stage first to how can we solve for it? How can we actually curate products, credit products for them, and say form factor remains card? How can we create products which are basis their working capital cycle, basis their cash flows, correct, rather than just one. I think that's the larger. So once the product fits their cash flow cycle, suppose a business, smaller business have a cash cycle of 15 days, larger business has a cash cycle of say 45 days, 50 days, correct? How do you solve for it? That's the larger question. So we have, again, done some work on this. So we're trying to fit a credit card, which is very, very segment fit within the self-employed segment. And once we solve for it, then comes the point, how do we underwrite them faster? I think there are certain digital stack, which is like GST is one of them, is actually helping us to build credit underwriting model basis the GST. Or like I think GST is widely being adopted by all of them, and it get good visibility other than the bureau about the business cycle. Correct. So that's one our alternate data or large data which we're using to underwrite self-employed segment. But other than that, I think we're working on those cash flow, working capital, inventory management of these customer bases, the inventory stocking, we arriving at what kind of a cash flow the customer will have. So there are multiple data which is largely available in informal. It will take time to evolve as in a model, but those are the things which we're looking into to underwrite these customer. But I think the breakthrough for all of us is now very, very near in terms of when we start with the credit on UPI. So what credit on UPI will actually do is allow us to actually start giving them a small credit line, correct? And then basis this behavior, you can build up credit, further credit to that customer. So all these things have been worked on to underwrite this segment, which is untouched from the bureau so far, correct? And don't have a strong bureau history and all to get a credit card. Yeah.
Yeah, absolutely. I think must be wondering that why are we discussing underwriting piece when we are talking about, the payments product, because credit card is not only a payments product, we all realize that it's also a lending product along with it. I think the ability to issue card on the fly is imperative, and therefore it's important that we also understand how the underwriting is done so that the customers get the card on the fly and is also able to transact at the very word go. I think that's the reason why we have tried to cover this point as well. Kohinoor, I'll just move to you, ask the same question. So you guys are in the MSME space. So how do you provide access to this segment?
Right. So I think when we talk about businesses, right, so there is the line between established and evolved business, who we call a corporate, versus a small business, versus a business which looks just like a consumer, are not very clearly defined, right? So at the fag end, there is a guy who is probably a sole proprietor who is running his own shop. His personal finances and the business finances are completely intertangled. You cannot separate out the two. Then there is a segment where probably it's a slightly 3-4 employee or 5 employee kind of an organization where probably you can separate out part of the finances of the owner or the proprietor from the business. And then the corporates is where the complete separation is there. Now, see, the biggest challenge, and I'm not specifically talking about credit card here, but I'm talking about credit to the business segments, is basically the availability of information to appropriately underwrite them. Because in underwriting, we generally have only two things, right? Intent and ability. Because we have historically not done a great job at underwriting them, so there is not a lot of bureau footprint available to identify the intent. Ability, again, we don't really have a lot of means to get a sense that how much actually are they making, right? Of course, with GST coming in, a lot of that piece is being streamlined. But I think if I purely talk from Bharatpe perspective, one of the most important information that we today have access to is what is the transaction volume that small merchant is driving, right? Because we operate as a offline payment aggregator, right? And basis that information, we actually can ascertain that, okay, what is his business is worth, right? What kind of trend we are seeing in his business? Is there a seasonality? Are there movements happening, right? So basis that, we can offer him some form of credit, right? We today do that in the form of loans, right? Can the same be replicated in the form of cards? Of course, yes. But then the second question comes that, is a card product really valuable for him, right? Now, if I tell him that, okay, here's a card, use it for paying your vendors, and then I charge the vendor some MDR or an interchange, is it an obstacle? Probably yes, right? Then if I ask him to pay back in a 45-day period, which I ask consumers to do, is that an obstacle? Maybe yes, because his cycles run basis the supply chain, which operates normally at a 60 to 90-day cycles. So are there products today which are actually looking at creating something which is focused towards that segment? I know many people are working towards it, but probably we are yet to reach there. So we have to get through those hoops to do a proper job at that. But I think, yeah, people are progressing. So.
Since you spoke about products and just around 2019, I think BNPL product was quite popularized. I think a lot of banks were in a kind of a gold rush to build a BNPL product. So Kohinoor, this question is to you. So you guys work on this space, and when BNPL was getting popularized, mostly the comparison was with a credit card product, because in many ways credit card is also a BNPL product. But the commercials and the way credit card operates, the entire operating system, everything is like well defined, well oiled. Even the commercial methods are like it's well known, and you have years of experience of running a portfolio. How does that work in a case of BNPL? How the commercial works in case of a BNPL product?
Okay, very interesting question. So, so I think, see, BNPL is a very fancy name for basically pay later, right? A credit card is also pay later, a consumer durable also pay later, right? But someone somewhere termed a very nice term called BNPL, which sold like hotcake. And we have history of a lot of players in some of the other markets in Europe, in Australia, who, went through a crazy scale-up period and then an equivalent downtrend, right? See, when we traditionally look at, if I want to segregate the card and BNPL product into two, what I call a BNPL is basically a product which is being underwritten at the point of sale, right? So a customer comes for a purchase, I look at his, whatever my assessment is, whether I look at his bureau or I look at, let's say, what he's wearing, and make an assessment that, okay, I can lend him some money for this particular product that he's buying, right? And then, of course, whatever is the term of payment, be it the EMI or be it whatever, right? Now, again, the key thing here is that underwriting at point of sale is, again, tricky, right? While we try to derive comfort out of the fact that this is a end-use defined credit. And when I say end-use defined credit is, when I'm giving a personal loan, it's a cash, right? So I don't know what that cash is going to be used for. But whenever it's a credit card or a payment product, I know that there is an end use is defined because he's purchasing something. So similarly, I try to derive some comfort out of the fact that, okay, this guy is probably buying a TV or a mixie. It's not going to be used in something else, right? However, that does not discount for the fact that that guy has to be credit-worthy, right? So a lot of companies have treated this as a funnel or a loss leader product to probably do small ticket lending, let's say, underwrite 100 customers. Of course, a lot of people will default, but you will be able to define a set of customers who don't default and then do more aggressive lending on those guys to make the overall portfolio look fine. So that has been the methodology in a lot of places, and purely the commercials were simply that you do a subvention from the merchant because you are driving footfall, and then you don't charge anything to the consumer, right? Now, when we are actually talking about a product which is a credit on UPI, right? And people are talking about small ticket loans, small ticket credit lines, this commercial aspect will become even more important because on the acceptance side also there is a beast, right? So the merchant who is taking the acceptance of the instrument here is used to a 0% MDR today. Now when you ask him to shell out an MDR, how does he react? So as an industry, we are all working out on that. When the RuPay CC on UPI got introduced, we are working out things how to solve for the merchants' woes. But that is something that the ecosystem has to solve for, right? Because without the acceptance, the product won't fly. And of course, the second piece that we have to figure out is how do we do prudent lending, and not just look at it as a channel product and underwrite lines of 500 rupees, right? So commercial has to make sense. but the fundamentals still remain.
Get that. Thank you. So just linking it up with the BNPL products. So one is obviously the commercial aspect, what we discussed. And Prithwish, this question is to you. When we were looking at developing this product, we also realized the credit card, though it's a BNPL product, cannot be replicated how the BNPL product was coming out in the market, simply because the card systems were not flexible enough to accommodate that, right? But having said that, you guys are working with a lot of banks and using the existing rails and building a layer over and above that, which is enhancing customer experience today. Could you just share your insights on how you are going about doing that? What are the areas you are covering? Like, say, for example, reward points has been a pretty mundane way of, rewarding the customer. So I think you guys have really worked some fabulous solutions there. Could you just share with the audience what are the work you're doing on that?
You've used the right word, right? The core was perhaps built years back for a specific use case. As customer preferences, payment modes have evolved, have industry technology kept pace? Perhaps yes, and perhaps not, depending on the way you look at it. And just to answer your question on rewards, I think most, if not all of us in this room are customers, right? So when we make the right kind of behavior, we expect rewards. But if you look at it from an issuer lens, from a P&L lens, things like MCC-based rewards, customer, different variants, different customers, you get different rewards. But now you're in a position where you need to perhaps differentiate between the choice of payment. So if I'm scanning and paying below a certain threshold, to Kohinoor's point, 0 MDR, there you make it a convenience product and not a rewarding product in that sense of the term. So where we come in as Hyperface again is building on the core, wrapping around the core, we are able to help issuers, clients differentiate between transaction A and transaction B. It's a multivariate distinction. It's not just MCC A versus MCC B or customer A versus customer B. If you're scanning and paying versus if you're swiping and paying. And given the fact that we all have spoken and agreed that this coexistence of form factors will continue, right? Whether it's a low-end growth strategy, which will take us to tier 3, tier 4, etc. I think the need to reward, but reward profitably, will be there. And the ability to do that at scale and quickly is where we come in and play Saurabh. And that's the way I would look at it.
Thanks. Amarjit, the next question is to you. So this digital payment is evolving. We all understand that. And one of the critical success factor is scalability. I think the success factor for UPI is one of the reasons definitely is scalability. So how are you managing your digital offering at scale while maintaining the data security and customer experience?
So sort of we all understand that company of our size, scale is a given, okay? And there is a highway. I'm a very positive person here, thinking that at the speed that we are growing, it's only going to multiply. We're talking about 3 trillion, 5 trillion economy in few years, and a capitalistic society will always have credit requirement, right? So therefore, scale is a given, credit is a given. Now, how do we match that? What we've done is that scale as an aspect is known, and we've done that in the past, we'll replicate. But I think scale with a lot of prudence, scale with a lot of safety, security, convenience, has to be all married. So what we're doing presently is, one, of course, with the digital infrastructure being available, thanks to all the pings and APIs that you can do very quickly and able to, ascertain a lot about, credit cards from a customer standpoint. Honestly, underwriting has become a very small portion now, which is probably that gray area where you take a call whether you want to do or you don't. Otherwise, you have everything available, from the customer's income understanding, from bureau understanding, from who the person is, authenticating and all of that, right? So for us, it's more about how quickly and instantly can I decision a card, how instantly and quickly can I provision the card so that you're able to make your first transaction instantly, how I can provide you an affordability linked with it, so that the whole aspect of credit come into play, that you've taken the credit card to be able to spend and pay later, right? And spend at scale. Sometimes you want to buy something that you probably couldn't have bought today and pay over time, etc., etc. So therefore, affordability. And lastly, we're trying to also see how, the information communication to the customer to be able to manage that very, very, kind of in a very prudent manner is important, because you ending up leveraging the same customer more and more is going to bite you at some point in time, right? Some of us, who kind of observing the market very closely, we do understand that cycles are going to come. And you can't deny that the cycle will never come. COVID was one aspect, something else will come in some time. So therefore, do you have the right customer to scale? Are you giving him the convenience? Are you giving him all forms of payments? And at the same time, the safety, security, and thanks to regulator, a tokenization aspect or even standing instruction aspect, everything is coming. Of course, we had in SI kind of a scenario, customers faced initial hiccups and so on and so forth. But then just imagine that you can't afford even one subscription to fail. And therefore, are the rails built in a manner that they're built, right? So we as an organization, we are focused there. I would believe that a healthy CAGR growth in the next 5 years is a given. And in our country, we're still, kind of bank issued credit card. Of course, there are a lot of alliances happening, and I'm sure many large ones will happen. And we will scale with prudence.
Well, since you mentioned tokenization, my last question is to Deepti. Deepti, as a founder of Kodo, how do you see fintechs and banks collaborating and changing the traditional payment system?
Yeah, so we work in the business side, like the B2B side of the business. And one of the things I believe is when it comes to financial tools, there is a lot of scope of innovation for providing tools that businesses, the financial teams can use to streamline their operations. For instance, one of the biggest challenges for SMEs in the country is that they don't get paid on time. Their working capital cycles are too long. And sometimes, even if the buyer has an intent to pay them on time, there are these process inefficiencies. Things fall through the gaps. And tools like us, platforms like us, enable the buyers to streamline their payments and make sure they're having better vendor relationships by paying them on time. Now, that's one part of the innovation in terms of the tools to streamline the financial operations for businesses. In the financial ecosystem, the beauty of the innovation that's happening right now is that platforms like UPI and open banking make sure that it's very easy to function with any payment provider, any bank, when it comes to the movement of money part. There are no more walled gardens out there. So a consumer or a business, they can pick up whatever is the financial tool of their choice to streamline their own processes and integrate that with a payment provider or a bank of their choice and make sure the entire payment process that they have is streamlined and they can spend and earn with a lot more confidence. And that's where I think the collaboration in the fintech ecosystem will flourish.
Oh, great. I think we have run out of time. It's almost time. Thank you, everyone, for joining. It was really an engaging discussion. Maybe we can take a couple of questions. Do we have time for that? One question? Okay.
Yes, I think Mike here. Mike.
This question is to Kohinoor. Kohinoor, you're talking about the pushback on credit on UPI, right? So a lot of these guys already doing a pushback, right? Like the guys who come with a QR code at your home for delivery, you try to scan and pay. With your UPI and credit, it doesn't work. But you try paying from the savings account, it works. But because the guy's at the door, you have to do the transaction. So that seems to be happening. But isn't the customer being cheated?
So, I think the customer, for the end customer who is paying, his life has not changed, right? But the merchant who is receiving, his life has suddenly changed, right? So, and the other thing is that a lot of times he's not able to understand that whether it's a credit transaction or a debit transaction at the point of transaction, right? He realizes later when, let's say, he realizes that, okay, there's been some deduction of money, right? So, a lot of times that creates a sense of angst among in the merchant, and he probably takes a decision of, no, I don't want to accept credit anymore. Right, these kind of things happen. And that's where we do a lot of activities with our merchant partners to explain to them what's the benefit of using the credit, why they should do that. And it's going to be an endeavor that will be on among the industry participants for the next 2 to 3 years as we mature into this phase, right?
No, I think the acceptance has taken the solution because my regular pharmacy guy comes, he accepts credit card at his, at his point of sale. But when the guy comes to deliver, it doesn't accept, UPI on the credit, right? On my credit card, my RuPay credit card. But my savings account, it works all the time. So I think you guys have got a solution for them, but the customer doesn't have, any solution in that sense. Because I wanted to pay via my RuPay card, but now I have to pay my savings account. So my life has changed because I'm paying via, my savings account and not credit.
Right. So that's the issue. That's with savings account. There is no MDR involved, right? So the merchant is a lot of times saying that okay, I will take a debit transaction, but I don't want to take a credit transaction, right? So that's the thing. But yeah, it's that period of the journey where we have to educate the merchant more and drive them towards this acceptance, right? Because eventually there has to be some cost associated with the transaction, right? So we are going through that process along with NPCI and all of our merchant partners.
Thanks.
If I may just add, so see, this is the newest baby on the block, so to say. And even when the whole thing was envisaged as, whether UPI on credit is something that, will help the industry in a big way because credit is coming into the foray, etc., all these things were pointed out. You see, a small merchant below 2,000, there is no MDR. Of course, there's a cost for a credit card, right? So when this was discussed threadbare, these points also did come about that somebody to whom a 1.5% pinch is going to come about, the merchant, how is he or she going to react? So these are, I think, these are the questions which are available. Our steering committees are being pitched and positioned. One communication, one understanding that credit will bring about more sales is also going to the merchants. It will evolve. If you ask me, it's a matter of time that they do realize that credit means more sales at the end of it.
That's it.
Yes.
Thank you, everyone. Thanks for joining us.
Thank you so much, ladies and gentlemen, for this thought-provoking session.